Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, May 19th, 2021. Figured it's a good time to get an update. Lots going on out there, not just in the market, but some other things. So let's just dive into the charts. It will not be a long video since it's early in the day. I want to get this one out and just point out this is, or I should say this or that was most likely yesterday's bounce back into the bounce target zone, again the shaded area. I want to believe that's the last chance, last bounce back into that target zone. It would be unusual to see during a correction much more consolidation than this. Usually that's about all you get. There was some consolidation. That last correction did something similar, two bounce backs to resistance, and then boom, another leg down. So here we are. Most importantly, as I mentioned yesterday, we need to take out last week's lows, and we're right there right now. That's why I'm doing the video. That's about 316 or so on QQQ, and that should open the door to my next targets. And at this point in time, based on what's going on with the daily charts, I'm more apt to just kind of go into swing trading mode, hold out. But if again, personally, I actively manage even swing positions, gaming, little micro bounces and all that. But for the typical swing trader, minimum target is down here around 311. And based on what's going on with the daily charts, the breakdowns we have there, we could see quite a bit more than that. So you may just want to hold out and trail your stops down, periodically lower stops, or at least move them back to down to entry at this point. We've been the Qs have been highlighted as a short really back here since this breakdown of that key 334 level. And so again, maybe that's your hard entry. You went to full position. Maybe you scaled in here. Maybe you shorted on the bounce backs to the bounce target zone. Everyone has a different cost basis, but that's where we're at. And I just wanted to mention before we move on, much more downside from where we're at right now. It's 9:49 a.m. as I'm doing the video. So by the time I get it out to you, it takes a while to upload and for YouTube to process that video. It's usually a good 30 minutes or so from the time I wrap the end of the video up, but that's where we're at, and I'm trying to give you a low of the day. Low of the day so far is 316.30, so pretty much we hit that that support right there. Again, when you're talking a $316 security, 30, 40, 50 cents was really insignificant. That's effectively a tag of that support so far, and this is where the bulls should step in. But what starts to happen at this point, it's like classical or Pavlovian conditioning. Pavlov was the one who'd ring the bells and, feed the dogs and they'd salivate. Then they started salivating solely from the bell ringing. That's what happened. Dip buyers get rewarded, but eventually, or actually now we're talking B.F. Skinner with the reward positive and negative reinforcement kind of thing. So, you get positive reinforced when you're buying dips in an uptrend, and that goes on for a long time. But then when the dip buyers start buying, and all of a sudden then they realize they're buying lower and lower and the dip buying is not working, that's when you reach that point of recognition. So here it is. This is, maybe they step in and buy here. They've been buying, they bought these last couple dips. And if they can do that, especially if they can get us up back above the bounce target zone, the downtrend line, then they'll be rewarded. And most certainly if the market continues as it's been for months now, after a small correction, goes on a new high. So, but if they don't step in here, that's a change of character. And it tells us there's more sellers on the sidelines right now than buyers. So that's why I'm doing the video. We're at a pretty important point right there. And then SPY, again, you had multiple opportunities at this bounce target zone to short or get out of your longs, including yesterday in pre-market. We were closer to the top of the zone. That pre-market's not showing here at this point because we're in the regular session. But that's it, and boom, right back down to that 405.76 support right there. There's last week's lows, and that was and still is that first target zone. It was already effectively hit the top of the zone there once. And if we come on back down, I favor move at least to the bottom of the zone. That's the minimum near-term target. So that's it. We'll watch for last week's lows, and then a lot of other stuff out there. I mean, there's so much I could cover in this video. I could talk for hours. You guys probably know that, but I won't. Not today, not at this point in time at least. We have the financials. That's a big one that's been on my radar. We need to see the financials break to get a half decent correction going in the market. I'm talking 10% or better. We don't have that yet, especially in the S&P 500. The financials are right at or a hair below that line, but remember, this is a daily chart, and you need to see a solid break, a solid intraday break. All the better if you get a solid daily close below that level. And that's it. So we're watching, or I'm watching the financials closely. And then on the related note, there was the investment brokers, the brokerage companies and exchanges that I covered yesterday. And this one, AIA, it's down 2% today. So, to me, like I said yesterday, the breakdown looks imminent. And if you want to take a starter short position on it, you can, but you really want to see the financials give way for sure on XLF as well as this trend line, or the individual brokers as well. There's, all the other ones I went through yesterday. A lot of those are at those trend lines now, like Schwab, there's a good example. Gap down today, and it's right on the trend line. So here we are. And that's the point I'm trying to drive. We are on key technical levels, key support levels where the buyers should, quote unquote, should step in. And if they don't, then it's a change of character in the market, and we're probably going to go considerably lower. And that's still my preferred scenario, that we have more downside to come in the correction. And IWM, not to forget about it, it's still always on my radar. Breakdown back test, just like the accused and SPY were below the primary trend lines, and that's formulates the bigger picture right now for me. And we've been dancing on this 215-ish support for a while, so when IWM takes that out, it should go down and hit that 205 target that I gave you back a while back. Okay, enough on the markets. Other things I wanted to update for you, and I had on my Scratchpad update crude yesterday. Last week I gave you a crude as an objective short here at 63 at this level. Now I have to say I rolled this chart. I had to yesterday start over because on this charting platform, even though I'm using the continuous contract, it rolls when that contract expires, stops trading, which it did yesterday. Now they rolled to the new ones, and that's to July. So then the numbers are going to change because the July futures contract is priced different. So what I did is it doesn't matter, because sometimes I like to do that, go from a clean slate. I should come up with the same levels. Sometimes they're a little bit different, but I wanted to give you targets, and there's one right there where crude is at support right now, and that's good for. Remember last week I mentioned this was a key resistance level right here. We had several reactions there. I'm trying to give you an arrow tool, and that was an objective short, and it came also with nice big divergent high as well. So kudos for those that took the crude short. We are now down about almost 6%. We're at support, so I need to point that out. Now if the markets give way, that will almost certainly, or very likely I should say, cause crude to break that $63 support and head down to that next support or target there about 60.63. And if it gets really ugly, I think we come back to about 57.64 right there. So there's some targets, but you have both crude and the stock market and a lot of those sectors I covered earlier in the video at support right now. So again, this is where the buyers, quote unquote, should step in. Bulls, crude bulls should be stepping in, stock bulls, and if they don't, then it shows you there's a change of character in this market. We now have more trapped longs and willing sellers than we do willing buyers. And that crypto bubble that's popping here, let's talk about that real quick, certainly doesn't help. The crypto bubble, to me, it's the closest thing. These cryptocurrencies are really, to me, the dot-com stocks back in 2000. Remember, it was the dot-com bubble that led the stock market to extreme highs back in 2000, and then it was those anything with .com in the name was leading the way, and it caused all other stocks to go up, particularly tech stocks. And then when the .com bubble burst, it was March of 2000 when it peaked. Then it took everything else down with it. So, cryptos, are feeling it. This was our, GBTC. I gave you an updated chart back here in February, even before the sell signal. I highlighted as a short setup. Talk about that all the time. When we were with the break or a sell signal to come below this trend line, I was highlighting that in late February. Shortly after that, we got the sell signal right there. And then I posted that chart, and so that's it. It was about a 50% drop almost down to that second target. And just like back then, the first target was hit. We hit the top of the trade first target zone. We bounced. Then we hit the bottom of the first target zone. We bounced. And we bounced for a while. And then that became support. And that's how these trades work. That's why there's multiple targets. Usually, not always, but usually you get a reaction on the initial tag of a target. And then B, once that target, which is support on a short trade, once it's taken out, the support level, that opens the door, as was mentioned just last week right here on the breakdown, opens the door to the next target. And so, if you just waited and shorted a break of the 39.25 level last week, and just in less than 1 week you made 28%, short trade, and there it is. The first target's effectively been hit. The low of the day now is $28 versus that target of 28.15. And then I mentioned this morning I added one more target here that I think will be hit. Do I want to game a bounce here? No, because now it's pretty clear this crypto bubble's popping. Has started to pop, and then I wanted to, that's not what I was trying to get. I'm trying to load that Ethereum for you. That thing took out the trend line. So for weeks now, bounces back to support, have provided quick bounce trades. But with Bitcoin moving sharply lower today, this is all cryptos are coming under pressure, including Ethereum, which had been outperforming crypto or Bitcoin lately. But then that gig is now up because this is a solid breakdown. Where is there a chance for Ethereum bulls? Is if 41.13, I put a level there. It's minor support. You can see we have a candle there, reaction, 2, 3, couple reactions there. That would maybe give us a back test of the trend line, but all in all, this is a breakdown of a primary uptrend line, and whether we get a kickback rally or not, we're probably going to go lower and maybe come all the way back down here. There's some support along the way. Here, let me give you one earlier target if you're shorting this or if you're looking to see how far it can go before maybe a bounce. Next support comes in around 31 and then 22.44. So that's Ethereum. And so I covered crude oil, cryptos, and then gold. Just this is nice because for many months now the narrative has been gold is yesteryear, and now crypto is the new gold. It's the new flight to safety asset. It's the new hedge against it. All the money printing the Fed's doing and the devaluing the dollar. Blah 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 blah. Well, lately and for months now, gold is starting to really shine, and this is what you call a flight to safety bid. So we're finally getting that flight to safety bid. Markets are down pretty healthy, and look at that nice spike up in gold today, and it comes right after, in the face of this negative divergence, and that like I like to say, that's a very bullish sign. If gold can just shrug off that divergent high like that. Now it still has divergence. I do have to mention there's still divergence in place because the indicator is making lower highs. So again, do you buy gold right now? You can, when you're in an uptrend. The thing about an uptrend, and this is where we say during a stock market rally or a rally in anything, there's a saying that I really like. It's never confuse genius on your part with a bull market. In other words, you can have the worst market timing skills in a bull trend if you're just bullish, and you can be buying the rips, buying the highs, buying here, buying here, buying here, right before the corrections. But guess what? You're still making money because a bull trend bails you out. And so you could buy here, but again, objectively, the ways you want to buy, and you have a much better cost basis going forward, is if you buy the dips, especially pullbacks to support, like that 1817 level right there, or the trend line. So that's gold. So bottom line is, there's still a chance for a correction, and I'll tell you what, if they can somehow save this market, come in today and rally the market up and hold all the support levels I showed you in the beginning of the video on the financials and other sectors and key stocks, turn this thing around and rally it up, and if crypto rallies hard somehow, then yeah, you're probably going to see a lot of that flight to safety bid come out of gold. So again, great if you're in it, and that's what I've been preaching lately is, back here was the re-entries for long-term investors and trend traders, and right now we look fine. And even if we did this, we'd still look fine if we came down to here. If we went even lower, we're still fine. There's support right there. When does it get ugly? Well, probably 1759 at this point. I'd really like to see that level defended on any pullback. but you do have support below it. So we'll just take it one day at a time. Right now everything looks good in gold, so let's just move on. And that's it. No reason to update I've updated a lot of the individual stock trade ideas lately, and you can reference those in the recent videos. Like Mara continues to play out. Of course, that's a crypto proxy. Signet Jewelers, very close to the breakdown. Tesla, been pushing this one for a long time, since back here, since that breakdown. And right now, actually, I'm going to add a level here for you. We have a couple reaction lows right there. So Tesla, like the market, is at support. So this is it. Because we're at so many key support levels with so many stocks and sectors, if we go much lower, I think we'll start to see that waterfall type selling. I mean, you've seen some down days lately, but a 2% down day, although it's volatility has been spiking. That's not what I call waterfall selling. Waterfall selling is like what we saw last March of 2020 when the pandemic hit, the fall of 2018. You'll know waterfall selling when you see it. And again, these are support levels. Bulls want to step in and buy if you think things are going to go up, like Tesla. And case could be made. We'll have a divergent low if Tesla just makes a marginal pop down below there. Maybe it goes down to that 460, 466 target. You might have the divergence in place still, maybe. But again, I think this one's coming down quite a bit more, ultimately down to at least that 464 or 465 target. That's it. Let me wrap it up here, get the video out to you guys. Yeah, there's quite a bit out there. I could talk on all the recently highlighted trade ideas all day long, but I'm going to stop the video here and sniff out and see if I can find some new setups for you. This has been Randy Finney with Right Side of the Chart. Have a great day.